today's episode, I am talking to Nick Majuli for the second time on the podcast. He was first in episode 132. So if you want his details, the background, more of his story about reinventing his path and moving into finance, definitely check that out. Also covers more of the contents in his first book, Just Keep Buying. In this conversation, we dive into all sorts of fun stuff around money. When does it make sense to take a leap? We debate a little. I argue you can take a leap with a little less money. Maybe he's a little more influenced by living in New York and working in the finance industry. But we had a fun exchange around that. We also talk about some of the data-driven trends happening in the US. We talk about how more people have become richer in the US and what that's meant for people competing for scarce luxury goods and things like that. Nick is awesome. He's one of my favorite people. I love how obsessed he is with data. He doesn't start from the memes or ideas or headlines you read in the news about finance. He goes and finds out and then tries to figure out what really makes sense. We also explore Coast Fire in this. I've talked about this a little in past podcasts, but I think it's one of the most interesting approaches to retiring early, as they say. We'll dive into all sorts of stuff with Nick. He's an amazing friend I've met on this path, super curious, and has a really interesting path himself. Without further ado, let's jump into the episode. So I wanted to dive in today talking a bit about your personal story. At the end of this book, you share a bit about growing up with some financial challenges. You said you felt comfortable, like your basic needs were taken care of, but there was a sense of scarcity. Your parents declared bankruptcy when you were young. How did those feelings manifest in sort of early adulthood?
I think I was always very cognizant of prices. Like, when you go out, like every time I went to a fast food restaurant, I was ordering off the dollar menu, which is now a thing of the past. We don't really have, I guess there's a value menu, but it's like $1.49 or $2 or whatever. And so that was like, when I go out with friends and they'd order like a $5 sandwich, I'm like, what are they doing? Like they should be ordering off the value menu, right? And so that was like these little things in my head. Like I thought Sizzler was a really high end restaurant, and when you're from like the lower middle class, it is a nice place, but you don't realize, oh, this is a massive chain, right? You don't realize it's like a Red Lobster is not like a Michelin star. There's levels to this, so to speak. And so that was kind of a lot of it. It was mostly through, food, dining, going out and stuff, because that's all we did. I didn't know anything about travel. I had never, I went on an airplane once when I was 12. And then after that, the only time I got on an airplane was when I was flying back and forth to school. But that was it. I never traveled anywhere, until I was actually, in my 20s and could save money and do it on my own.
Yeah, there's no real training for sort of updating where you are in your life. I think I've actually gone through quite a bit of this, like after I did my own thing and sort of realized, oh, when I was in consulting, I had actually like saved a bunch of money and earned more, but I had never updated my habits. Like I was making 150 grand and spending 850 a month on rent and living in the bottom of like a super rundown place in Boston. And looking back, it's like I probably could have like squeezed out a couple hundred more, but I didn't know how to spend money. And I didn't realize like mostly it was emotional. I was scared to feel those feelings of like not having enough. How you don't really explicitly touch on like how you got through this. I mean, was it literally just making more money? I mean, like, how did you process those fears?
I think it was just a process. I think you're right. It was literally making more money and starting to feel more secure and not worrying. And eventually I also started reading a lot more about personal finance and investing. And I started writing about it eventually much later, right? I started writing about when I was 27. That I was talking about stuff that happened when I was 22, 23. So it was a few years where I was saving money and I started writing about it. And then my philosophy, even from then, has changed a lot. Like even my philosophy now about spending has changed. And I've tried to come up with different frameworks to allow people to like give them the freedom to spend more based on different metrics and things. And so that's kind of my new way of looking at it, is like when we think about spending money, like how can we do that in a way that allows a little bit more of that freedom over time.
What are some of the rules? What's like the
Yeah,
most interesting recent one?
Yeah, so the most recent one, I mean, I'll give you the first. The first one I came up with in Just Keep Buying was called the 2x rule, which people really liked, which is like, hey, if you want to buy something, like say, you're like, oh, I don't know if I can afford this thing, save up 2x for it, and then take the other amount. So let's say it's a $500 item, you save up 1,000, and then you take $500, you buy the item, and then you take the other 500 and you invest it in, your portfolio, or you donate it to a charity, whatever you want. The other 500 has to go to something else. And so if it's like, if you really want it, you'll save double for that thing. And so that was called the 2x rule. People like that, but it's also like, I like throwing out a bunch of different rules. I'm like very like, hey, if you don't like that, try this. If you don't like that, try this. I don't think there's one correct path for everybody. And so now in the Wealth Ladder, in the new book, I have this rule called the 0.01% rule. And the idea behind that is that 0.01% of your wealth, or 1/10,000th. So just take your net worth, divide by 10,000. That's the amount of money you can spend basically every day without having to worry about it, right? And that's not going to be a large amount, right? If you have $100,000 in wealth, that's only $10 a day. And so you're like, Nick, I can't live on $10 a day. I know you probably have income and you're living off other stuff, but it's that marginal decision. It's that, oh, can I buy this thing? Can I buy this extra thing? Or can I upgrade this thing, right? And so you make these marginal decisions like in different spending categories, right? Like if you're at the grocery store, you're like, oh, do I want to get the cheapest eggs, or do I want to get the cage-free eggs, right? In the United States, like, oh, the cage-free, like $1 more. And so like that marginal decision is $1. Like at that moment, that's the marginal decision. And so my argument, if we use this rule, if you had over $10,000 in wealth, that $1 is trivial to you. Just get the cage-free eggs, right? And as your wealth goes up, the size of that marginal decision gets bigger, right? So by the time you have $1 million in wealth, that marginal decision is about $100 a day. And where does this assumption of the 0.01% come from? There's a few different areas I got it from, but I just assume that your wealth grows by that daily. And so over a course of a year, if you do 0.01% every single day for a year, that's about 3.7% a year, which is, I say, a very conservative return. Great. That's almost like, that's what treasuries are basically paying now. And so you're like, hey, if we assume that's true, your wealth's throwing that off every day. It's a trivial amount of money. Where I actually came up with the rule, though, there's a Jay-Z lyric. I'm not going to repeat the whole lyric, but he says, what's 50 grand to someone like me? Can you please remind me? That's paraphrasing the quote. But at the time, Jay-Z was worth $450 million. So let's just say $500 million to make the math easy. 50,000 over 500 million is 0.01%. That's actually where I got the number from. And he's like, hey, 50 grand to Jay-Z. So right? It's like 50 grand to Jay-Z at the time was a trivial amount. And so guess what? 1/10,000th of your wealth is also a trivial amount. So you would be saying, hey, what's $10 to someone like me? Can you please remind me if you had 100 grand? So it's the same type of joke, but it's like, that's, I think people say things, they don't realize it. And then it's like, wow, there's actually some depth within this random thing that somebody threw out. It's like, yeah, that is a trivial amount of money. So that's how I like to help people spending now. And why I really like the rule is it allows for a lifestyle creep. Over time, you can spend more, but only after you've built wealth, only after you've shown financial discipline. This is very different than a lot of the spending rules, which are based on income. Income can fluctuate. Yeah. In the creator space, like you could have a really big year and then, that income dries up because you don't, or like, hey, this may not go on forever, right? Like anyone who has lumpy income, especially, I think wealth is a more, stable thing. And because of that, I would say let's spend. Marginal spend is based on wealth, not income.
I love that. Yeah. My income dropped 50% in the last year. But that wasn't a bad thing because the bump the previous year was such a surprise and an upside that it enabled me to invest a lot and make a lot of savings and stuff. But if I had anchored to income as my metric of like success and how I spend and how I make decisions, it would have been like devastated last year. Granted, there still are people that think like that, but I'm a bit more conservative than most. What I sense that too many people who have moved up the wealth ladder, as you deem it, and you have levels, don't switch to thinking about net worth instead of income, right? I've talked to people who are like I've literally talked to retired people who are perfectly financially free, right? Millions of dollars in the bank, but they only calculate spending based on income. And this is why in the first episode we talked about like most people die with lots of money. When is the right time to start thinking about wealth versus net income? I basically did it because like I didn't know if I was going to make more money, and I was like, well, I need to meme myself into thinking this way. Otherwise, I'm going to go crazy. But yeah, talk to me about making that shift because I think this is so important.
Yeah, so I think focusing on wealth, I think most people should do that in general because income can fluctuate a lot, and
Right.
it really depends on where you get your income from. If you're like in a very, I would say something like a very safe government job, but everything that's happened in the U.S. recently, even government jobs aren't safe anymore. So let's imagine you're an athlete and you spend based on your income. Athletes tend to have shorter careers and they get most of their earnings over their entire life within, let's say, a 5 year span, right? So if you're
Yeah.
spending based on income, those first few years, even if you're saving 20 or 30% of your income, you're saving a lot of money because you're probably making millions of dollars. So you're saving a lot, but what happens in year 6 when you no longer have that income and you're still spending like you do? That's a wake up call that a lot of people don't realize is going to happen. And so I say spend based on your wealth because as I said, it's a little bit more stable. Income fluctuates a bit more. And so where does that happen? I don't know. I can't give you the exact moment, but I think people should start thinking about that a little bit more. That doesn't mean, of course, you have to spend based on your income. Like your income, of course, matters, but I'm talking about, oh, can I go? And so what I did with the wealth ladder is every level has a different spending freedom. So let me just explain the levels briefly, and then we'll talk about the spending freedoms. And once again, it's going to use the 0.01% rule, so it'll make sense. So level 1 is less than $10,000 in wealth. Level 2 is $10,000 to $100,000. Level 3 is $100,000 to $1,000,000. Level 4 is $1,000,000 to $10,000,000. Level 5 is $10,000,000 to $100,000,000. And lastly, level 6 is over $100,000,000. And those levels, each one has what I call level of spending freedom. So level 2, that's called grocery freedom. I mean, level 1 is just paycheck to paycheck. You don't really have much spending freedom with less than 10K. Level 2 is what I call grocery freedom. When you go to the grocery store, you can kind of buy what you want, especially by the end of level 2. Level 3, which is once again $100,000 to $1,000,000 in net worth, is what I call restaurant freedom. You can start to buy what you want at restaurants, especially by the end of level 3. Level 4 is what I call travel freedom, so you can kind of start to upgrade your seat on an airplane. You can stay at a nicer hotel, etc. Level 5 is what I call house freedom. You can start making basically getting a house kind of where you want, but that's 10 million to 100 million. Very few people get there. And then level 6 is that's just like prices don't even matter anymore. Now you're talking about you can buy businesses and really I call that impact freedom because you can really change people's lives in a much bigger way there. So those are just a way of thinking about it. And if you use the 0.01% rule, these kind of map onto those spending categories, right? So level 2 is $10,000 to $100,000 in wealth. If you divide by 10,000, right, on each one of those, that's anywhere from $1 to $10, right, on the marginal decision. That's about the difference in prices between items at a grocery store. Between the standard item and the quality item is about $1 to $10, right? You're not looking at that much of a difference. Go to a restaurant, right? What's the difference in prices there? It's going to be somewhere between, $10 and $100, which maps on to level 3, which is $100,000 to $1,000,000 in wealth, right? So once again, each one of these spending categories is based on kind of like the range of values we see in terms of prices today in these different spending categories. So that's how I think about it, and that's the way I frame it for people when they're thinking about spending money in levels, etc.
Yeah, it seems like there's a lot of opportunity to start thinking about wealth in that level 4 or level 3 range, as you're saying. And I see many people in level 3 and level 4 still playing sort of this income mindset, which I think limits their freedom. So I'm sort of writing a book about money too, as one does. It's like the final frontier of personal development. Um, but I'm writing to a very specific audience. People who want to buy back their time freedom as soon as possible. Like maniacs like me. Very niche, very specialized. And one thing that really helped me was thinking about wealth. So, 4 years into my path, 2021, I'm sitting and calculating up how much money I have. I hadn't looked at it because I was living like a artist. I was living like a freaking vagabond. I made about 30 to 35 grand a year. And so the game I was playing before I quit my job was make more than I earn and save as much as possible for the future. I was crushing it. Like those consulting firms are putting like no questions asked investments in my retirement fund. It was delightful. And so after I felt immense shame that I was just like a bad, irresponsible. And so finally I'm like, all right, I should like do the math. run the numbers, and I'm like, holy shit, my net worth doubled.
Oh, wow.
And so I felt totally irresponsible. I felt like I was leaning into freedom in reckless ways. Like, okay, I probably can't do this forever. And then I was like, holy shit. So I wrote a blog post. I declared myself retired from work I don't want to do anymore. And so this kind of cured my like money fears. And then the frontier after that for me was learning how to spend. Because I realized like I was still playing like I was in college. Like I was so scared to spend, and as I was getting married and starting a family, like you got to spend a little money. Like if you have money, you got to make like your spouse comfortable and your kids comfortable. And so yeah, that's sort of my journey. Um, it's a very interesting one. I basically am taking level 3 and saying like, screw this, I'm going straight to level 4 freedom without the money.
It
Um,
depends where you live too. I think a lot of that too, when I talk about travel
I don't
freedom,
think so. I did it in the U.S. I did it in Boston. I did it in New York. I did it in Austin. I did it paying 3,000 a month for rent. Um, I traded off things that most Americans see as required for modern life.
so I guess yeah. So what's like one of these requirements that you would say? Like what's one of these things that's required for modern life as an example?
Owning a house or a car,
Okay,
or eating
that's
out at restaurants.
okay. So those are both fair things, and those are very large spending categories for most people,
Yeah,
right? So like I don't own a home, I'm still renting, but that's because of the mortgage market, and that's a whole separate combo. But I see if you're like, hey, I'm not going to eat out, I'm going to eat it. That's a massive amount of savings every single year that you can spend on the apartment or something else, right? So people can do it in the U.S. I think it's just easy. Like for example, like I talk about like how much is enough and like which level and where you could be. And so most people in the U.S. when they're talking about calculating their fire number, they're I need this much to be financially free. Most people are going to be in level 4 because just the
yeah,
cost of things in the U.S. is generally a little bit higher. I think in Europe you could probably do it in level 3 because they have a bigger social safety net. Healthcare is cheaper. Like there's a lot of things you can do it in other places at a much lower cost. And I think that's why expats exist and why this happens.
yeah, for sure. Yeah, I don't know. I think it's far more possible in the U.S. than you think. I just think you can't live in New York's SF or like California.
That's fair. Yeah, I mean, I'm saying this like coming from New York City, and that's where I see it. That's my worldview, and so like I
Yeah,
agree. Like yes, you could if you're living in a more rural area. Like that's why I say it depends where you live. That's my little bit of a caveat, and it really depends. And
yeah.
I am kind of siphoning out. I
You're
grew up in California, and then I went to New York. Like I've been in like the most expensive areas in the country most of my life. So
yeah, you're also in the finance industry, and you guys are better at producing wealth than the other industries.
we're a little
I'm just
closer
saying
to
from
it.
my exactly my experience is basically just all my readers and listeners. Like it has blown me away how many people are creative about like pulling off like creative freedom at much lower wealth levels. But they're making a lot of sacrifices and they don't have paths. Like, I don't have a path to own a home. That would be intolerable for like the median American, I think.
I mean, I don't say there's no path. You're a creator and you have an audience. So, like, the path for you to own a home is like books. Like, keep putting out books and like that.
I know.
It's possible. It's
Yeah,
definitely
yeah, for
possible.
sure.
Yeah.
Yeah, so I think this is something you talk about, which is like you were sort of pursuing building your own business by the blogging and stuff while you were doing your job. And so this is part of like how I'm thinking about things too, is I see like the creator path as sort of betting on the fastest growing economy in the world, the internet. And so that's like just a smart way to invest my time and attention, right? And so even if I'm having mediocre success, there may be some upside to that.
Yeah, no, there's plenty
But
of upside. Like, there's so much upside to it. I think there's a lot of upside on the internet. That's why, I mean, we
it's
both are in agreement. We do this stuff. Like, so we do this stuff for a
yeah,
living, right? Yeah.
It's hard to feel that though. I think this is an edge for me. Like I don't feel that. Like I feel like I'm sort of like on the decline now. Like, okay, I have this
You
like big,
had one, you just because 1 year, like, it's so crazy to me, like, oh my, this change or that change from last year. It's like such a, I'm not trying to be rude, but it's like very short sighted. Like, dude, you're a writer. People connect with you. The fact that you have a podcast and people come back, like, just because you had one good year one time doesn't mean like you're never like, oh, you peaked already. I think that's kind of a, writers have a much longer multi-decade careers.
yeah,
You
yeah,
just got to keep putting stuff out. Like, I wouldn't think that way at all, especially like,
yeah.
if I'm a betting man, I bet you're going to far outpace the other stuff. It just takes time, man. It's like there's no way around it. Like, you know.
Well, this is a really interesting thing to explore. Is yeah, I think the reason I think that way is almost tied to my money beliefs, right? And so I think I'm almost like auto-regulating by like defaulting to the assumption that I'm not going to have like up and to the right success as a way to protect myself,
That's fair.
right? Um, yeah, this is basically something I'm interrogating through like writing the book. It's I hold both beliefs at the same time. Like I'm very bullish on my writing career, and like when I go to think about money, it's like, okay, I'm not gonna bet on like income going like this. It's more like, yeah, there's probably opportunities in the future, but if I can like break even or save slightly more every year, that's like a perfect life for me. And I'm actually like very happy with that. Um, but yeah, how do you think about like money scripts and thinking about the future? I mean, you have a job too. Are you thinking about going solo eventually or
Not anytime soon. I think I would just change my responsibilities at my job before I left. I love working with them. I love a lot of
yeah.
the stuff I do, but every job, everyone that's ever had a job, there's that 20% of your job that you just can't stand. I have that. I'm like, hey, if I could just move this off my plate, this would be even more perfect, right? And so I love the job. There's pieces of my job that I probably should be delegating to other people, and I will get to that, and it's slowly happening. But that's kind of how I imagine it playing out. I don't want to leave the firm. I enjoy working with the people I work with. And it's just like being a part of the culture is another piece of it too. So maybe I want a little bit more time freedom. And so I might lower my pay and go through that conversation where, hey, why don't I change my role? And we kind of work through that. And I think they would be open to that too. I just have to figure out what's the best, role for me at the firm basically. And so that's going to change over time. Right now I'm the COO. I don't expect myself to be the COO when the firm's twice or three times the size, just because it's a different firm, it's a different scale,
Right.
and you kind of need someone with that can give that your all. And I love writing books and doing content, doing that as well. And I don't want to be outside of the wealth management side, but I also don't think that's my thing. I'm the best COO in America. Is all right. Like that's not my thing at all. I can tell you that with 100% certainty. And so obviously, I give it, my best shot at everything I can do, but I can tell you it's not my highest interest. And so figuring out that path as we went, I was the perfect COO to get us from 20 employees to 70 employees, but am I the perfect COO to get us from 70 to 500? That's a different question, right? And so thinking through that and how we scale and change, I think that's more open. And I do have the content, all the stuff I do on the side, the books. And so I think it's a perfect balance for me because I have a little bit of both. But thinking about the future, I have no clue what's going to happen. Like it's so unpredictable.
Same.
And I think I just I've had a lot of good, positive upside surprises that I wouldn't have expected. Like, you had a lot of success, you said last year. Like you probably didn't expect that to happen, right?
No.
I've had the same thing, man. Like my book has sold more in Taiwan than in the United States. Like how I never would have
I love
predicted
it.
that, right? That's an example of like I can't predict what's going to happen next. Like this new book, there's a advance in Mongolia. Like I didn't even know Mongolia had, that they're buying a bunch of
Separate
financial
rights,
books.
yeah.
But yeah. So it's like I'm learning about like what the heck? Like so it's like there's all these weird upside things that happen that I never could have predicted back when I started writing in 2017. And so it's it's been almost 9 years now. And I think when I think about these things, like there's just so much more upside potential on the internet that you just can't predict. Some person reads you and they share with their audience, and now you're popular in another country, right? Like I had the biggest podcast in Italy have me on. My last name is Majuli, so I'm not going to lie, that probably
I
helps
love
me a
it.
bit. But the biggest financial podcast in Italy had me on for his like 2-year anniversary, and it like kind of went viral in the in Italy, LinkedIn, and now all these people are buying Just Keep Buying, right? The which just dropped at that time. So it's like that's just upside I can't predict. I'm obviously very fortunate and lucky, but like you just got to keep putting your stuff out there. And so that's how I think about it. I'm not like, oh, I'm borrowing against my future. I know I'm going to have way more money. I don't know. Maybe I will, maybe I won't. I have no clue, but I
Yeah.
just kind of keep at the work and focus on the work, and the rest kind of takes care of itself.
Yeah, I love that. It's there are weird properties of money though. Like I just did my 8-year review of being independently employed. And before that I was on the default path for 10 years, but 8 years employed. The
Mhm.
amount of income I made was almost exactly the same.
That's cool. That's
Over
what's crazy. In eight
That's
years, you made what you
crazy.
made in 10 years, right? Yeah.
No, 8 years. 8 and 8. Same.
I didn't realize. I thought you said 8 versus 10. Oh, I'm sorry, I didn't hear that. But yeah, so 8 and 8.
Yeah.
That's crazy. That's even crazier. Yeah,
And so it's more exponential on the current path
yeah.
with the like current dip, but yeah, it's got me thinking. Like, I often hear people leave $500,000 jobs, and then within a few years, they're making $500,000 working on their own. Like, I think there is sort of this gravitational pull of either one, like what you think you're supposed to be making, or who you're surrounded by. Like everyone I know who works in finance makes tons of money because everyone else is making it, and it's like expected. And I was doing some consulting work and encountered people in the tech industry consulting, and I realized their rates were like 3x mine.
Oh wow.
And so I just 2 to 3x my rates, and like people just started paying them. But I didn't even know like that's what people were charging. It's
That's so true. If you don't know, like,
yeah, it's such a weird thing. Do you have any experiences with that or?
I had this experience where I was someone asked me to speak virtually, and I was like, "Oh, usually I'll charge this." And then my wife was like, "No, you should charge this, just because they really want you. They're really asking for you." And then I asked ChatGPT, "Hey, here's my background. Like, here's how much my book sold in this country. Blah blah blah." And it was like, "You should be charging this," and it was like 3 times higher than what I was going to charge. And I was like, "There's no way they're going to say yes." I sent it, and they said yes, and I was like, "What the heck?" And so ChatGPT just 3x my speaking rate, right? Just because I didn't know any better. So I'm like, that's
Yeah,
an example where me
it's
paying
so true.
$20 a month to this stupid information machine, and it's a genius, and it helped me 3x my rate. It's gonna pay. I paid for all my ChatGPT for the rest of my life from one conversation I had with it. Right? That was like crazy, but it's like that's an example of like, wow, like if you don't know any better, like there's so much information out there you don't know about, even in like foreign markets, especially. Like I don't know what speakers get paid in Taiwan or Japan or all these other places, and
No.
and that's like one of those examples where, yeah, how much should I be charging for this? And there's information out there for that.
Nick, we have to do an event in Taiwan at some point.
I'd love to.
I just published my book there. My wife's putting a book out there. We're like building a lot of connections. There's probably some Taiwanese listeners to this. Let's get Nick to Taiwan. We got
Yeah.
to do this.
Yeah, give me some time. I got to see how this book does and everything. Give me like 6 months or something, and maybe 2026 we can kind of plan this out, because I know if I go back to Japan, I can do both, right? Because I know there's gonna be some events there I'm gonna have to do, but yeah, it's gonna be very exciting. So
This could be like your own pathless path. Like you just may get enough readers that like you just become like a Taiwanese financial manager.
yeah, who knows? It's very funny because it's hard to predict ahead of time, and obviously, like if my demands for my time got so big and I had to like talk to the firm, like, guys, like what am I supposed to do? Like I want to work for you guys and do this, but like I also have these like I need to sit there and have a very frank conversation if I ever get there, right? And I'm
Yeah.
hoping that doesn't happen. I'm hoping like things go well enough and I don't get all these demands on my time, and so I can keep doing my thing. But we have to see, because I love working with these people. I love what I do. And I love helping people, and like I want to be a part of the wealth management industry as well, because people are having conversations, and like when you're talking about money and money management, I don't want to be so removed from it that I'm like writing in a silo. Like I want to be around talking to advisors that are talking to clients, and here are the types of things that are coming up, and what are wealthy people actually worried about, and what are they not as concerned about. Like all those things matter, because when you're trying to write to that audience, you need to know, and so being on the inside does help that a little bit.
Yeah, and I love that you're in the industry. You're one of the most like grounded and like data backed people in the space. Like you combine like great writing with information almost better than anyone. And so maybe a place to take this conversation now is there's so much nonsense out there with finance. Like these popular like headlines get repeated over and over again, and they're almost always fake or just totally lacking the nuance. Like I don't know, 60% of Americans are living paycheck to paycheck. Not really true. Like there's people making 250 grand a year that are saying they live paycheck to paycheck, but they're paying off their credit card every month, right?
And they're maxing their 401k every month, and they're like,
Right. They're building wealth.
yeah,
And the other one is millennials are much poorer than previous generations, though there's some interesting nuance there. And then, and then income inequality is getting worse than ever. So I don't know which one of these you want to explore. I actually think we talked about the millennial one on the last podcast. I think the final one is really interesting. More Americans are getting richer. And you break this down really well with your levels. Can you talk a bit about this? Because it sort of goes against what people believe.
yeah. So in 1989, 7% of households, and this is inflation adjusted wealth. So once again, we're
Right.
adjusting for inflation. You have to assume CPI does a generally good job at doing this. In 1989, 7% of households were in the 1 to 10 million range, inflation adjusted. As of 2022/2023, that is 18%. So the number that shift, that's what I would call the upper middle class, and if I'm putting a label on it. Of course, you're saying, well, $8 million upper middle class. In most places, no, but in places like certain places in California and New York, yes. But let's just put a label on it. That's upper middle class because I need to have some sort of label. If we assume that's true, that cohort has over doubled in the last 30 years, basically 35 years almost. And looking at the data, I just wrote a blog post on this called "The Death of the Amex Lounge," and the idea was, what's going on? Like, why is the Amex Lounge overrun? Why are people, like when people go to resorts, like they're getting up at 7 a.m. to go get pool chairs? Like, what's going on there? Like, why are housing prices not coming down? Like, they're crazy. Like, there's more $1 million homes than ever. It's like, and even in places like Dallas and like all these different areas are seeing $1 million properties. Like, what's going on here? It doesn't really add up to me, right? Especially with mortgage rates as high as they are. So it's like, there's all these things that are happening, and I'm starting to see like the upper middle class is getting very crowded. Like there's a lot of people in that space now, in that level 4 space, and there's over 20 million millionaire households in the United States right now. I think it's like 23 million based on the 2022-23 data. And obviously, we had 2024 was a big up year, and then this year has been kind of a semi up year, right? So overall, like there's even more wealth. Like this data is even lagging a little bit. So on top of that, like you think about all this. There's all this competition for not as many resources, so these prices are going up specifically in this area, right, where the upper middle class is competing, right, for like airport lounges, hotels, travel, and what did I say? Level 4 is travel freedom, and that's where we're seeing most of the competition happening, right? And so when I think about this, like there's more people with money than ever before, at least in the United States. I can't speak for the world. I know that it is improving on a world base, but
I think it's even more in Asia.
Yeah, there's a lot, and then guess what? They're buying a lot of U.S. financial assets, and there's all sorts of stuff happening there where, like, there's just a lot of wealth being built, which is a good thing, but now we haven't built enough of these scarce resources to accommodate that, so prices are going up, right? And once people own these expensive homes, they don't want to see the price of their house go down, so they try and block new construction. They do things that are in their self-interest, right? They're like, hey, well, I spent $1 million on this property. Why the heck am I going to allow them to build another 500 of them, and that drops the price of my home by 200K, right? So they don't want to see that. And so the more you think through all these steps, you start to realize, like, yeah, it's getting crowded nearer the top. And so this upper middle class kind of cohort is just bigger than ever. And the data is pretty strong on that. And this is just a survey of consumer finances looking over time. And there's just fewer people in the lower levels, and it's shifting upward. So people say, the middle class doesn't exist anymore. No, it still does. Like the 100,000 to a million is about 40% of U.S. households, and right now the 1 million to 10 million is about 18% of U.S. households. So that the vast majority of people have anywhere from 100,000 to, let's say, 10 million. I know it's a big range, but that's roughly 60% of households are in that bucket. And then 40% are in the bottom bucket, and there's like 2% at the top. So.
Yeah. So the middle class shrunk and people got richer, and then people don't like it. Because they want more of what they imagine their life to be. This is honestly part of like what motivated to me to leave my path. Like, I was in this world where I felt like I had made it, but everyone around me just seemed like miserable. Like you'd hear the bizarrest things, especially like when I was in New York before I'd leave. It's like, well, like 300 grand isn't really enough to raise a family. And it's like, what assumptions are, can we unpack the assumptions here? Because I could
Private
certainly,
daycare, right? Like you start going
right,
through a private
exactly.
daycare. Okay, that's probably half of the 300 grand right there, right? And then you go through the other ones. Yeah.
Yeah. And so yeah, it's sort of sad. I think, I mean, Bertrand Russell was writing about this 100 years ago. He's like, I think we could actually meet all our needs with like far less work. And then he adds a qualifier at the end of the essay. He's like, but human desire does seem insatiable. So we'll have to like check in on that.
Well, that little ending was perfect.
Yeah, exactly. Everyone's always talking about his projections of like, oh, no one will be working, but everyone misses that one line about like the insatiable desire. Um, yeah, I mean, the way out of this is just building more stuff. I think one of the biggest challenges is travel. Like, travel is leading to all sorts of crises. Like, in Asia, the biggest um, people traveling are Chinese. Like the amount of people entered the Chinese middle class in the last 30 years is like bigger than the United States. And it's far cheaper to travel in Asia too. It's pretty wild. Like I don't really meet many Americans here in Thailand. It's mostly people from other Asian countries traveling.
Yeah, well, because it's closer, right? That's one piece of it.
Yeah.
And I think when we like people talk about like, oh, is it worse for millennials today or this or that? Like, yes, housing is harder to get. There's no debate there with rates where they are and prices. It's definitely harder. I'm not going to debate that. Incomes, there's more competition now. Like, back in the day, you just had to compete with people in your local economy, right? And, even you go back to the 50s, it was mostly men competing with men and then women into the workforce. And now that's half imagine playing a game where half the population can't even play against you, right? Like it's a pretty nice edge, right? Now they can. And now imagine playing a game where you only have to play with your local economy and now the
Yeah,
whole
right.
world's playing against you, right? So you can just see. And now guess what the next step's going to be? I don't just have to compete with people. I have to compete with computers. I have to compete with an AI, right? So it's like that's where what's going on is like there's just more and more and more competition over time, and so like incomes are being a little bit stagnant, and I think it makes sense. It makes logical sense why that's happening. Real incomes have not grown as quickly as wealth has, right? For example, and in terms of the travel stuff, so like I think that's also a big thing. Like we talk about the American dream, it's like, well, no one can own a house anymore and all this stuff. I think a piece of it is the American dream has changed. Like a lot of younger people want to travel. They want to do stuff. Like go
Yeah.
talk to your parents. Ask them how many times, unless you grew up like kind of wealthy, your parents did not travel a lot when they were younger. Like they did not get on
No.
airplanes. If they traveled, they drove. They did not get on airplanes and,
Right.
oh yeah, I went to Thailand. Unless they're very particular, most people didn't do that. My parents didn't do that. Most of my friends' parents didn't do that. But most of my friends and their friends, a lot of people, and my sister went to Japan before I did. And I'm not trying to say anything bad about my sister, but she does not make a ton of money, And so people are traveling and they're taking what money they have and they say, I want to see the world. They'd rather do that than buy a house. They're opting out of the old dream and they're saying, hey, I can just rent. I'd rather rent and go and travel the world than own a home and then I never leave. And so I think those are the trade-offs that people are thinking about and they're willing to make those trade-offs. So I don't think it's as bad as it seems. Yes, housing affordability is a problem, but people are getting other things which I think they want more than housing.
Yeah, I agree. I'm far happier. Yeah, we just got rid of all our stuff again.
Oh,
7 months.
Again, I love this. Like we just accumulate over the course of 8 years and then get rid of it, and you kind of go back
No,
to
no,
these cycles.
no.
Yeah.
We only had our suitcases for like 3 years, but
Okay.
when Angie got pregnant, and then we had like the first year of her life, we like accumulated a bunch of stuff in the American tradition, and it doesn't suit us. It's not doesn't suit our nature. Um, but yeah, so square this with there's a really interesting chart in your book which talks about the wealth level change over 20 years. And what really blew me away with this chart, I have the data, so I'll just read it. People that either had so no change was 51%. but down one level or down two levels was 10% and 2%. So that's 63% of people whose wealth is stable or down. Like, is there an age effect happening here? Like, what? How do we square that with like the median wealth is going up over time, but 70% of people or 63% of people are seeing their wealth decline over 20 years?
So this is wealth level change, and I do address this
Oh,
in the
okay.
book. So because I say it's a wealth level change, because someone could be in
Okay,
level
so a
three.
million to 870 might not be that big of a deal. Yeah.
Yeah, or so let's say you go not even just that. Let's say you start with $200,000, and this is over 20 years, by the way. So let's say we start with $200,000. 20 years later, you have $500,000. You're inflation adjusted. You're still in level three. You have not changed your level. So
Yeah.
51% of U.S. households stayed in the same level over 20 years, right?
So that could still
10%
be
fell
an
down a
increase.
level. Yeah, 10% fell down one level, which could happen for a variety of reasons. Maybe you're a retiree, you're drawing down your assets. Maybe you had a medical condition. Maybe you had a lot of money in an over-concentrated position and it dropped a lot and you lost a lot of your wealth. And then 2% fell down two levels. So those are much more dramatic and that is much rarer, right? But still, if you look at the other ones, 32% were up one level and 5% were up two levels. So, 1 in 20 people really saw a 100x jump in their wealth over some period, and or at least a 10, probably more than that, 10 or more, right? But let's say 100x average, and then 32% of people saw a 10x jump in their wealth. And of course, you could start in level 1 going to level 2, that's an example, or 1 to 3, that's a 2-level jump, right? But it's interesting to look at that. And as I say, like, even if people don't jump levels, they're still building wealth. So on average, people
Yeah.
are building wealth over time. It's just how likely is it to have a large jump in levels
Oh,
over time? And now that was the purpose of that table showing that. So
I love
yeah.
that. I feel like there would be a good article on this because I talk to people with literally millions of dollars who will claim that their biggest fear is going broke. And so you can just say the odds of that are 2% and probably zero given your like network and connections. Um,
Yeah,
but
how are you
it's,
invested too?
yeah, it's like it's more socially acceptable for like millionaires to talk about um, like their fears of going broke than like telling people how much they actually have.
Yeah, I mean, Michael Kitces did this study where it was a retirement study where he said, hey, looking at history, if you use the 4% rule and a 60-40 portfolio over 30 years, you are equally as likely to end up with 4 times your wealth as you are to end up below where you started. So if you start, let's say, $1 million and you
Yeah.
start just using the 4% rule and do it for the next 30 years throughout, U.S. history and a 60-40 stock bond, you are equally as likely to end up with $4 million as you are to end up below a million. Like that's how rare those two. Most people end up with 2 to 3 times their wealth while they're pulling money out of their portfolio and spending and doing all this stuff. And of course, this is historically. Maybe the future is going to be different, but I doubt it's going to be that different. But it's just kind of so incredible that like this actually happens, and it's like people think, oh, I'm going to run out of my money, and even in the worst case scenarios, it's like, oh, I died. After 30 years, I died with a little bit less than where I started, inflation adjusted, right? It's like, it's absolutely bonkers.
So I've showed some people these models, and some people's emotions are incredibly strong, and they don't care about the data. They're gonna tell you that they're emotionally correct. Like, do you do you have ways of like communicating emotionally with money? I feel like this could be the next book, like the emotions of money.
Yeah, I don't know. It's a great question because you have to really get at where's that coming from, and a
Yeah.
lot of times there you have to dig deep into someone's history and really get into like where's that coming from. Like, well, I don't care about the data. This time's different because AI, or this time's different because of this or that, and
Right.
they
Oh,
might
the
be right.
reasons are impressive.
I can't say with certainty they're wrong. I can't tell them AI is not going to eat the entire job market and there's no more white collar jobs and it's just creatives with these machines creating $1 trillion companies and all that. I doubt that's going to happen, but of course it could happen. I don't know the future, right? And so I can't. There's no thing I can say like I guarantee that's not going to happen because I
Right.
don't know, and that's the truth.
Yeah, people will say to me like, "What if the global economy like crashes in a catastrophic event?" And I'm like, "Well, we'll both be fucked, and you'll be the one that called it. So maybe there'll still be a market for that, but like I don't think it will matter."
It's like, okay, do you have guns and canned goods and medicine and like at some point you can see where this is going. It's like, okay, if
Yeah,
you're
yeah.
worried about that, just be a prepper. Like, just take 1%
Yeah,
of your net worth
exactly.
and be a prepper. Like, I'm completely for that. I 100% support it. Take 1% of your net worth, have it in canned goods, honey, things that just don't go bad, right? Have it in all these different things and store it somewhere, keep it under lock and key, and have some sort of ways of protecting it and wait for the end times if you think that might happen. Like, it's a hedge on civilization collapse. I doubt that would happen, but if it does happen, you'll be covered.
Yeah, it's almost the prepper is almost more sane than the person who claims they're gonna go broke that has millions of dollars.
I agree. I mean, if you are that worried, hedge, do something, hedge
Take
it out.
action.
Yeah,
I
take
love it.
action. Exactly.
Coast Fire. You've written you think it's the best fire.
Oh, it is.
I happen to agree, though. I tried writing a book about it, and I realized I have to like repackage everything, and I think I'm gonna create Pathless Fire because I don't think Coast Fire perfectly fits my approach. But yeah, why do you think Coast Fire is so good? And maybe give people an intro to it.
Yeah, so the FIRE movement, I'm guessing many of your listeners have heard, but I'll just recap,
Yeah.
is financial independence, retire early. And the idea is once you have enough assets that it's throwing off enough income to cover your spending, then you never have to work again. You're financially independent, you can retire early. So, very simple example. Let's say you spend $100,000 a year, right? And your portfolio can throw off, as soon as it can throw off $100,000 a year, let's say after tax, right, to keep everything right, then you're good. And so what most people do, they just say, hey, let's use the 4% rule, or AKA take my annual spending, multiply by 25. That's the same as the 4% rule, right? You take a number, divide by 0.04%, or divide by 0.04, and that's the same thing. 100,000 divided by 0.04 is going to equal 2.5 million, which is 25 times $100,000. So basically, as fast as you can, get to 2.5 million, then check out. You never have to work again. That's FIRE. That's the most extreme version of FIRE. There's something called Fat FIRE, which is like, hey, you want to have even more of a buffer. You want to be able to spend way more than you could ever imagine. So Fat FIRE, you need 3x of that. So you're going to need 7.5 million. So you want to get to Fat FIRE, right? And then there's Lean FIRE, which is, there's all these different variations. The one that I like is called Coast FIRE because it says, hey, save up enough money to the point where your retirement's taken care of. So let's say you saved up. I'm just going to make these numbers aren't going to make sense. I'm just going to make the math easy just to run through this. Let's say we know you need $1 million for retirement. And let's say we know you have $500,000 now saved for retirement. And the idea is like, hey, I know when I'm 65, let's say I'm 35 now. So 30 years from now, I'm going to need $1 million, right, for my retirement. I have $500,000 now. As long as the growth rate, you can calculate, hey, if I assume it grows at this rate and then you come up with a conservative assumption, let's say 4% a year, if it grows at 4% a year for the next 30 years, it's going to get me there. Perfect. So now I calculate what that number is to get to $1 million in 30 years, and let's just pretend it's 500,000. Bam. I have my money. I can now Coast FIRE. What does Coast FIRE mean? You leave that 500,000 alone. You let it grow over time. So by the time you get to retirement, you have that money. Then all you have to do, you don't have to save any more money the rest of your life. You just have to cover your current living expenses. So if your income's very high, you're like, hey, I can go get a lower income job. I can go work on what I want. I can go write books, do whatever, as I just need to make enough income to cover my current spending. I don't have to worry about saving for retirement. I don't have to worry about saving for anything else because my nest egg is there and it's going to grow. I can never touch it, though. That has to go all the way to retirement before I can touch it. So that's the only assumption in Coast FIRE. But the reason I like it is because what I think happens is people get into, let's say, level 4, maybe low level 4. They have $1 million, maybe $1.5 million, $2 million, whatever. And they're like, hey, I don't have enough to be financially free. I don't have, like, let's say $3 million or $4 million. But I have enough where I can say, hey, I can take my foot off the gas. I can go work on projects I care about. And I'm going to be fine. I'm going to get to retirement without an issue. And you don't even need $1 million or 1.5. You can be at
You
like
could do it in
500,000.
level 3 easily.
Yeah. You can be in 500,000. Let me actually run the math here. I'm going to do this little calculator
I
real
mean,
quick.
I did it with less than
Oh,
500,000.
you have it already? So yeah, if you do 1.04 to the 30th, let's say, how much is that to the 30th?
And that's very
It's
conservative.
3x. Yeah. Yeah. So
and it
if you knew you
doesn't
needed
count
$1 million,
Social Security. So I
Yeah, it
add in
doesn't count a
Social
lot of stuff.
Security and just pretend like that's going to be perfectly sound.
we're just if you say, hey, inflation adjusted, it's going to be the same amount, which is about $1,500 a month. Let's just assume that's true. I know you probably earn more than the average person, but let's just assume it's $1,500 a month, which is what it is now. Take that out of your expected spending. Yeah, you can run that back. But 4% a year for 30 years, I just did the calculation, is like a 3x return. So if you're like, hey, I
Yep.
need $1 million when I retire, then you only need, roughly 333,000 today, or 30 years before retirement, and you just let that grow. So that's kind of the thinking behind that.
Yeah, I love it too because it shifts the focus from money as so fire positions money as both the problem and the solution, which I actually think is a mistake. For me, money is simply it is a problem to be solved, but the solution is to orient your life in ways that make it easier to produce money in ways that feel good and sustainable. So that's sort of like my spin on it. Um, and what I find is a lot of people are embracing this without like doing it as a fire thing, right? They just intuitively say like, okay, I have money saved. I have a kid now. I'm going to take a step back in my career. Like people have been doing this for a long time, right? You have a kid, you turn down the promotion because you want to spend more time with your family or things like that. Um, and yeah, I think my spin on it is actually like boldly go after work you actually care about and prioritize that above the paid work, right? So figure out how to get paid work to break even and do whatever you need to do the like actual work of your life. And the work of your life can be very broad of like taking care of your kids for 10 years if that's something like that's something I'm thinking about a lot is I don't I'll probably be less productive over the next 10 years, but I want to like purchase, like buy the freedom of spending more time with my children. So yeah, it'll be fun to explore these, but yeah, how do you feel about Coast Fire? Would you do it?
It's a question of when, and the only thing I think I could coast fire now, but
Yeah.
that's under the assumption I don't have no idea what kids are going to cost. If you had kids in, that kind of changes things a little
You'll
bit,
figure
especially
it
in like
out.
New York. Especially in New York City, I don't know. That's one piece of it. Plus, if I was
True.
coast firing, I could take care of them. I would be more the labor for that. The other piece,
Exactly.
which I think I know less about, is like my mother. I'm gonna have to like probably help take care of
Yeah.
her and supplement
That's
her because her
important.
social
Yeah.
security income by itself is not going to be enough. So I kind of have this like squeeze coming where like I just got married and I know we're gonna start having kids, God willing. And then this squeeze is coming where I have to pay for the next generation and the prior generation. So I don't know, and that's the only unknown I have. Otherwise, I could probably coast fire today, but my goal is not to. I enjoy working. I enjoy doing the stuff that I do. Once again, there's still pieces of my job I'm trying to get rid of. I don't want to do. Outside of that, I enjoy most other things. But I agree
Nice.
with you. I think the premise of fire is about money a little too much, and coast fire shifts the conversation to like, what do you? Okay, you need to get
What's
some
the
money.
life
Like,
you want to
hey,
live?
you need some of that. But after that, then it shifts the conversation to like, well, what do you really want to be doing? And you're saying no. Shift it even before you have that little nest egg built up. Maybe you have a little, you need some emergency money, but even like right after you get that first little out of level one, now let's look towards the pathless fire or however you're going to define it. So,
Yeah, I don't know if I'll call it pathless fire, but it's basically pricing in the fact that if you stay longer on a path you don't like, you are undermining the energy to work on the stuff you are. So for me, I actually wish I left earlier on my path and poorer because like those early 30 years were I was just trapped in like not I was making progress on a path I didn't want, right? That could have been time I started writing and like invested in those earlier years when I would have been more comfortable living on less and stuff. So yeah, like figuring out that trade-off is really hard. Do
yeah,
you,
I think it's really tough to kind of go through that because like
it's
the
so
fact
personal too.
you experience that pain, and that pain is what got you onto the
It's true.
pathless. Like if you hadn't done, like I wish I never done that, you wouldn't be like you wouldn't have written the pathless past most likely. You'd have been like, oh yeah, I kind of jumped off and did my own thing, but like you didn't have that depth of like, wow, this is really. I mean, you probably knew it wasn't great, but you stuck with it maybe 1 or 2 years longer than you would have liked to, and that really solidified that feeling, that emotion, which is now driving you down this other pathless path,
Yeah.
as we would call it. So I think you got to think
That's
about both sides. When you're like, oh
yeah,
crap, I
yeah.
wouldn't have done this if I hadn't had that
That's
experience.
actually
Yeah,
something good to add is like,
yeah,
yeah, if you're going to take a creative path, you might rack up a little more pain. Like the pain of my chapter 3 of Pathless Path like wouldn't have happened if
Yeah, exactly.
do you have a definition of enough?
It's a great question. Once again, it's always, I really think it's about living life on your own terms. Now, what does that mean? Does that mean you don't have to work? I don't think so. I don't think that means you never have to work again. Some people say, oh, you have enough once you can never work again. I don't think that's true.
Yeah.
I think
I think
you
that's
can have
cope
enough.
too. Like I think desiring to escape work is just a really terrible starting point for thinking because we all work. Like even if you're not working paid work, you're going to take care of your community and family.
Yeah, you're going to do something like that's productive. I mean, there are people out there like, oh, I don't want to do anything. I just want to sit on a beach all day. Great for them, but that is a very small percentage of the population that actually enjoys doing literally nothing for like the rest of their lives, right?
Yeah.
Most people want to do something. They want to feel like they have a purpose or something like that. Whether that purpose, as you said, is childcare or taking care of your parents or writing books or whatever it is. And so figuring that out, I think, is more important, and then working toward that. So the definition of enough, I think it's a moving target a little bit depending on what your expectations are and what you want out of life. So I don't have like a here's my enough number. I don't know because the future is very uncertain. I'm trying to, figure out where that place is, and I think within the next hopefully 5 to 10 years I figure that out, and then I prioritize that. My goal is not to be grinding away into my 50s and 60s and like working a corporate job and doing all that stuff. That's definitely not my goal. I will definitely be taking a step back. I just don't know when, and I'm 35 now, so I've been very fortunate and I'm a bit younger, but I got to figure out where that spot is in the next probably decade.
Yeah. I think enough is really just a feeling. I don't think of like a number. Though if my financial situation changed a lot, I would certainly do a lot less money making work. But I really loved this one thing you wrote in your book, and it's something I resonate with really deeply, and I think is actually the key to like all these questions we're circling around, which is like the life you actually want to live. I love like, so you wrote, anytime my friends visit New York, I try to make time to see them. I plan a trip with my mother and sister every Mother's Day. If my wife asks me to watch a movie after dinner, I don't tell her I can't because I need to work. It's like these are literally the choices that really matter, I think. And no amount of money makes these like easier or harder, right? And so this is actually something I've really embraced too. If my wife proposes going out, I go. It doesn't matter like what I have to do. And I actually have a rule: if anyone visits me, especially abroad, I don't work for the entirety of their trip and hang out with them as much as they want.
Oh, that's awesome. That's really cool.
But the cool thing about this is that is actually motivation to then go back and design the life you want, right? So I create all these rules, like I want to spend the morning till 9:30 with my daughter and like come home at 4 every day. That then makes it really exciting to work backward and say, okay, how do I earn money in ways that actually make that happen? And I think a big thing missing with people when they're like struggling to find enough is they don't actually know like what they would do with more time if they were to purchase back some of their time or lean into freedom.
That's fair. I think a lot of people, if they don't have a hobby or let's say their kids are grown, they don't really have that anymore. Like, what do you do with that time? And that's why I think a lot of, it's very easy to get caught up in, traveling, which is great and all, but you do that, partying, this and that. It's very easy to get caught up in those, consumption type habits. But you're right that not everyone knows that thing.
Yeah. You say you don't have to believe me. You can climb the wealth ladder on your own.
Yeah, that's the ending there is very interesting because it's like, hey, like you start to realize and pick up on stuff that you wouldn't have realized before. Like I remember some of the money decisions I made very early on were very, scarcity based and stuff. And it's like looking back now, it's like, I guess I did that because I didn't know the future. I didn't know like, okay, I would have been okay. And it's not even like I didn't even have to be on this particular path. I could have still not had the books and all that. I still would have been okay, right? Like that's another piece of this is like you don't realize that, but at the time, I get it. You make certain sacrifices at a certain point in time, and I don't think there's anything wrong with that. But just your thinking on money changes, especially as you build more of it.
Yeah. How are you feeling about writing these days? I mean, writing's kind of weird with LLMs changing it. I think it's definitely replaced some kinds of writing I would do in the past, which is more like, okay, I'm gonna like document how to do something, which is like done by LLMs. But I'm still feeling pretty energized about it, though I do have some fears about like, okay, is there even gonna be a market for like reading stuff in 30 years? Yeah, how are you thinking about it?
I think if you're doing anything that's just purely informational, you're done. Like if you're just like, hey, here's the updated tax rates. Like, no, sorry, that's like Google basically. Like someone's gonna say, hey, what changed in the tax law? The LLM's gonna summarize that it's gonna
Yeah.
steal the content from the people that actually summarize the thing, or it's gonna read the thing itself and summarize it, right? So if you're just doing purely informational stuff, like traditional SEO, here's how to bake a cake stuff, you're done. If you have a differentiated opinion on stuff, you're completely fine. I think that's the only bastion of truth or forward vision we have as writers is differentiated opinions, right? Because think about like I used to say this about SEO, like why Morgan Housel is such a great writer. I'm assuming most of your audience has heard of him, or Psychology of Money, etc. Do you know why he was such an amazing writer and he was so bad at SEO? Now, what do I mean by bad at SEO? When people are searching stuff like
Yeah.
should I buy now or should I wait? Like, should I dollar cost average or lump sum? That is a question that people have asked before, right? When people are, Morgan Housel was writing things for questions people had never thought about even asking. And that's what made him, quote, bad at SEO, but that's what makes an incredible writer, right? Because he's saying, you're not going to search this thing. If you say like, hey, tell me about tail risk. What is tail risk? Like you'll get a definition, but you just got to read his post called Tails You Win, and it's a much better understanding of tail risk than reading the dictionary definition of tail risk, right? So you can't SEO that story about Disney and all this stuff, right? You can't do that, right? And so what LLMs are, they're just advanced SEO. And so they're just going to go out there, steal all this content and put, any general informational stuff's going to be there. But if you have a differentiated opinion on anything, SEO's done. Because SEO, or not SEO, the LLMs are done. For example, max out your 401k. I am very against some of that advice because that's what everyone else says. All the financial advice people, basically 10 out of 10 financial experts will say, oh yeah, you always got to max out your 401k. I don't recommend that. So like you have to have differentiated opinions. Otherwise, don't even write the post. That's my new thing now. If I don't have a differentiated opinion, I don't even think I should be writing about it.
So I think this might be something worth covering quickly because I actually have this regret, probably for the reason you would point out. A lot of people who are thinking about taking an alternative path, like probably should put their money in a brokerage over a retirement fund, right? I mean, max the match, right?
If you need to access it.
Max the match because that's free money. But
yeah, you get the match,
don't.
but after the match, it's like that money is going to sit. And if you don't know, especially like in your case, like if you know, hey, I think I'm going to probably leave this behind, like what you could do is you could roll it. If you had a Roth, you could roll into a Roth and pull the contributions. Like there's a lot of ways to get some of this money, but I don't like thinking about it like that. I kind of regret putting too much into my retirement accounts for like 5 years. And it's not a bad, oh my gosh, you did such a bad, like it's not, in the grand scheme of things, it doesn't matter. But I do think because it's the default advice, you don't question it. And because you don't question it, you end up following advice and saying, wait, what if I wanted to retire earlier? What if I wanted to go do something else with my money? I can't access it because I locked it up in this box that I can't touch on 59 and a half. So that's just an example of that. Yeah.
Yeah, there's assumptions behind all advice, right? Which I think is the key point. The assumption behind that advice is you're never going to stop working.
Yep.
Right. And so if you're following this podcast and you still have that assumption, I don't know why you're listening to me, but I have a differentiated opinion. I can survive.
They're listening every week because they want you to convince them to jump off the standard path. They're not there yet, Paul, but they're getting there.
No, I think most people are already like solidly defined. Be interesting. Leave comments on the Spotify podcast for this. Like most people already know the direction they're headed or are on. They just want to feel like slightly better about what they're doing. And so a lot of people are over to channel, they're like, oh, Paul's even more nuts than me and he's figuring it out. So I'm not that crazy. And that is the service I offer here.
Yeah, that's great.
Awesome. This is a really fun combo. Any other topics you wanted to explore with me? Um,
Whatever, it's whatever you want, man. I think oh, so we could even talk about the publishing industry, but I know you've spoken about that a lot. It's very interesting, like how that's going to even evolve. I just watched something recently, but I think it was the CEO of Cloudflare, and he's talking about how like
yeah, that was
all of our content for bloggers, all that, it's being sucked in by all the LLMs, and then someone asks a question, it just spits out our stuff. Sometimes it'll source us, but a lot of times it won't. And if it does source us, very few people actually click to that end link. They just read it and say, okay, that's the answer and that's the end of it. So they don't click to the end link. And if we're running web ads, you don't get monetization. And the LLMs aren't paying us for using our content. So it's like we're giving up our content for free, right? And so what does that mean? It's either I either have to lock up my content, which I don't want to do. I want people to consume it, but then
right.
how do I get compensated? There's either a web ad or people hear about me and they buy my book. I think through the LLM, it removes all that branding and removes any chance of that happening. And so now I am losing that benefit. And this is true of all content creators, by the way. It's not just me, obviously.
Right.
And so the question is like, is the future going to be we lock up all our content, or is the future that the LLMs come to us, OpenAI comes to us and says, hey, every time someone calls one of your articles, we'll pay you, it'll be like a Spotify thing where you're getting, a fraction of a cent. But like still, if you do that across thousands of queries, I'm willing to be like, hey, let's do that. I'm happy to take that. I would sign that contract and be like, okay, I'd rather do that than like I have to either do that or lock up all my content and say, sorry guys, like the LLM screwed me, and I don't know what to do. I don't know what's the correct approach.
Yeah, I think it's a wild west right now. It's definitely going to change. What have your Google Ads like revenues gone down noticeably?
I think they've gone down a little, but not as much because I don't have a lot of SEO on my content. Once again, I'm trying to put out differentiated opinions, so I don't do a ton of SEO. Half of my page views, though, are to my S&P 500 calculator, like a historical calculator said. So, for example, if you say, what did the S&P 500 return from January 1980 to December 1989? Like, what was if I put $1 in, what would my
That's
final...
half your traffic?
Half my traffic is that. And you know why? Because an LLM can't automate that. Because an LLM,
Right.
if you ask it that, it's going to it'll give you price, but it can't do dividends reinvestment. It can't do the inflation adjustment. Even if it had the data set, it's going to screw that up. I'm telling you, the math is not advanced enough. It's not smart enough where you ask it, it's going to do all that calculation in an instant. It just can't do it yet. Maybe one day it'll get there, but mine does it every single month. It's backed. It shows everything. And so that's roughly half my traffic comes from that. So...
Sam Altman, if you're listening to this podcast, just throw Nick 5 million for the calculator. It's win-win for us all.
The calculator is easy to do. The problem is you have to build that logic ahead of time. It's not something that's very simple because you have to okay, make sure to adjust for inflation and do dividends. Oh, also you want to include bonds sometimes because sometimes some people want a stock bond calculator. I have one of those too, right? So there's all these different calculators that an LLM can't just create on the fly and it's going to be that accurate. And I think that's a big piece of it.
So publishing, you did hybrid publishing and then traditional publishing. How are you thinking about it? I mean, I think you're in an interesting role because I think you're sort of approaching it like me. I have other stuff that does fund my creative life. I want to be fully unleashed creatively and explore all options. I am not worried about building a creative career. I don't want to be dependent on it. So yeah, you can experiment a little more. How are you thinking about either future books or like lessons you've learned from the two different publishing experiences?
Yes, the first one was with Harriman House, which is like a joint venture. You don't get paid in advance or anything. I kind of went through it. I had no idea what I was doing. I did it. If I'm being honest, I modeled most of my career based on Morgan Housel. He went to Harriman. I was like, yeah, I'll go to Harriman too. A lot of people in FinTwit, financial Twitter, went to Harriman. So I was like, okay, I'll go to Harriman. It was great. Great experience. Love working with them. Nothing wrong with it. But it's like, okay, like I now know that I have an audience. I kind of have this stuff. I had to do most of the marketing. I had to do most of the stuff. That's true of every publisher. You're going to have to go do a lot of that. And so I didn't realize that going in. I thought they were going to help a little bit more. And it's not that they were bad particularly. Like, that's just the whole industry. That's how it is. They are not
Yeah.
there to, oh, we really got to push this book, because they have another 20 books they're trying to push at roughly the same time within a month or two, right? So because of that, it kind of just changes the incentives. It's like, so I'm doing all the work and you're going to take half of the net, basically. It's like, it's kind of crazy to me, you know? And so I did that, and then obviously my next one, Morgan went to portfolio. You know, I saw that, and I said maybe I should try and do a deal. Like, let's see. And so I went and spoke with some people, got an agent, and walked through the whole process, and I found a deal that worked out. And I really enjoyed the experience. There were pieces of it that were a little scary with production, where like there's so many different teams. Like,
Yeah.
I'm sending stuff into the void. I'm like, okay, like they say they're gonna fix it, but I'll wait and see the final draft. Like, it's not like I have someone I can talk to. Yeah, we made that edit. Like, I just put my stuff out there and I hope it gets done, and then it comes back to me. And so it was a little more bureaucratic because it was a bigger company. But there are certain things, like if I had self-published, I know, like this cover, I could not have come up with this cover if I self-published. Like, this is a great cover. Everyone's told me, oh my God, like the 6 levels. Okay, you got
It's
the six.
great,
Like,
yeah.
yeah. So like there are certain things that worked out well, and we had to go back and forth on the cover. But this is an example where like I wouldn't have come up with as good of a cover as they had. So that's just one little piece where like it can really pay off. And I know there are cover designers out there that can do this quality of work, but I wouldn't have been able to find them, if I'm being honest. Future
Yeah,
books, I don't know.
Especially the first time. I think I got lucky with my cover the first time, and it's so good. I love it. I went back to the same designer, and like his covers did not work. And then I had to hire like 4 different designers, and I'm learning Adobe myself. Yeah, but I think the advantage is I want to publish like 10 books. So I just see everyone as sort of a rep, and I'm just going to get like better and better at this. But yeah, how are you thinking about it going forward?
Yeah, so I don't know, and I have to see how this. I mean, this book's coming out like basically now. By the time this podcast is published, it'll probably be out July 22nd. So, seeing how that goes.
I didn't know
and
it
then,
wasn't out yet.
yeah, no, it's not. We're still in pre-order phase right now, technically, as we're recording this. So it's gonna be out next week. Yeah, so I just don't know. I have no clue. Obviously, like if it does really well, and then I like sometimes they're gonna just write it. I'm like, how do I not take another deal on another book? I don't know. You have to think about the trade-offs of that. Is it just the money? Is it like at the end of the day, I care about putting out the best product I can. I think that's more important. I care more about like long-term sales than anything. And so if I think I can do that without a publishing company, if I could self-publish and maybe work with another, one of these other new age publishers, there's a few of them out there. Authors Equity, there's Infinite Books, there's Scribe, right? These other different that are kind of saying, hey, we're different than the traditional publishing industry. I might be open to it. Obviously, I need to think through that, and we got to see how this one does. And I just have no clue. Maybe I'll never write another book. I don't know. Of course, I said, 7 years ago, I said I'd never write a book, and now I have 2. I don't know. I can't predict the future, to be honest with you. But when I wrote the first book, I knew I had this book. I knew that this book was an idea. I knew I would eventually write it. I just didn't know when and when the timing was right, and I got the data that I needed to make it happen. So that's kind of how that evolved.
I love it. Just keep buying the wealth ladder. Trying to think what the next who knows?
Everyone thought my second one would be called "Just Keep Selling," but we're still in a bull market, so not yet, folks.
I just keep buying. It just seems to work.
Yeah, and it's going to work. And obviously, there's going to be a period where there's going to be a dark, decade for the U.S. stocks. It will happen eventually. It has happened, a few times in history. It's going to happen again. Everyone's going to say I was an idiot, and I'll say, okay, I will keep purchasing through that dark period.
Yeah, same. Yeah, I'm like old enough to remember that. Like I went to college during that. I bought my first stocks in like '04, I think.
Yeah. That's middle of the bad. At least you avoided the .com stuff, which was the first kind of rollover. That second rollover in '08 was brutal though.
Awesome. Yeah, this is great. I love talking about this stuff with you. You're so you have such strong opinions, but it's because you've basically like done the research and like really thought through what these things mean. It's awesome. It's great to have befriended you and see somebody do such awesome work out there. I honestly haven't been like replying to most other authors trying to come on like podcasts and stuff, but
I appreciate that, Paul. Have me on.
I just I can't play that game. That's another thing with the author thing. Like everyone hyping everyone's books. Like I literally don't have the time. I have a child now. But this is, go ahead. Yeah, this is like a very live topic, and I think money is such an important topic to really have a good foundation on if you are going to be on an unconventional path.
Yeah, I appreciate that, Paul, and I appreciate you having me on. I know how protective you are of your time, so it's very valuable to me. You know, I know everything with that, and it's just so interesting when I first met you, like in person, and you're like, oh man, like I was like, what we were talking about, I can't remember. We brought up like, what's our worst fears or something. You're like, my worst fear is having to go to a meeting for a job. And I was like, this guy is like wired differently. Like this guy is different. Like I'm like, oh, that's not my worst fear. Maybe like I don't know, a rattlesnake bite, or I don't know, being killed. I don't. There's like all these other things I had, and you're like, dude, if I had to wake up for a meeting, if I knew I had like a 7 a.m. meeting tomorrow, it would scare the hell out of me. I was like, okay, Paul. It's like this guy's wired differently, and so this is why I admire that. I admire that you are taking a bold step in a very different direction that is not on the default path. Obviously, you built a brand off that, which is great. But I think it's very cool the people you inspire with that. So.
Yeah. To be fair, this is not a meeting. I find this very generative. One of my reflections at the end of the year last year was I actually need to have more conversations like this because they're very life-giving for me. And so
That's great.
it's great. Yeah. I was kind of like just writing with my free time, and I was kind of going a little crazy because I didn't have a bunch of the like random combos and ideas flying around happening.
Yeah, you need those inputs, right? Whether it's reading, whether it's talking to people, everything. I think the LLM stuff, we could riff on that for forever. I think there's a lot there, especially us as creators. We're like, there's a lot of stuff going on in that space, and it's going to have to change because, you know, people paying for the thing is one thing. I think the future of that is going to be ads. They're going to run ads in the LLMs. I don't know when,
Definitely.
but it's just that's the model that's worked on the internet for so long. I can't see how it doesn't happen. I think it's just going to take time. Just like there was no ads on things, and then ads show up, and they always do. Even Netflix, like Netflix never ran ads. Now there's the ad tier, right? It's like, oh, we're never going to have ads, never have commercials. But now that the ad tier always comes, it always happens no matter what.
The end of ZERP. I got to
Yep.
get ads on this show.
Yeah. This is sponsored
What am I
by
doing?
the
I'm
end
running
of
this for
Zurich.
free.
Yeah, what are you doing?
If you're a sponsor and you want to give me 50 grand with no responsibilities, I am happy to.
You know,
put
just
you as
rename the
sponsor.
podcast to like whatever, the McKinsey path. What if they paid you 50 grand?
Oh
Oh,
my
wow, that would
God.
be hilarious.
50 grand's not enough.
I don't think it's not enough to rebrand yourself. Yeah.
The McKinsey path. That would be, man, that's like an April Fool's joke.
Oh man,
All
it's
right.
been good chatting. It's been good
We're
chatting.
going to wrap this up. Thank you for joining us in the Money Hour with Nick and Paul. And have a good night, everyone. Hope everyone has a good week. Definitely check out Just Keep Buying if you haven't bought it. Like, it is my go-to personal finance recommendation, and all my new Taiwanese listeners. Go buy Just Keep Buying. I'll learn that phrase in Chinese so I can hype it up a little more.
Yeah.
But yeah, thanks again, Nick, and appreciate you as always.
Thanks again, Paul, for having me on. Appreciate it.